Will U.S. tariffs on Chinese electric vehicles move GM stock higher? We will answer this question based on data from the trades of wealthy investors by analyzing unusual option activity worth at least $500,000 on the last trading day. So without further ado, let's dive into the data as usual. As we can see here on the options time and sales tape, May 16, we had 4,500 unusual options being traded. For the August 16, 47 strike calls, 50 strike calls. Now, there was also another 500 here for the same options at the same time. So this was actually a total of 5,000 contracts. So what are they doing? Let's take a look at the chain. We can see on May 16, this is the trading day, yesterday. These August 16 options at the 47 strike calls, we have 5,000 volume greater than the open interest. So we know these are opening trades. But at the 50 strike calls, we have 5,000 volume, but 11,000 open interest. So these 50 strike calls could be closing trades where they are closing out of these 50 strike calls and opening the 47 strike calls. And if that is the case, that would mean that they were originally at a loss, but they are still getting into these calls going bullish. And so we can see here by analyzing this trade at the 47 strike calls, these are clearly going bullish long, because as the share price of GM goes up, these call options become profitable. If they go down, it is a loss. And that is why there is a positive delta on this trade. If it was a short bearish position, it would be a negative delta. Okay. Now, because this trade has more risk in comparison to the trades that we share on our website, because of the data is not as clear, we only use position sizing and getting to the same trade here as a way to manage our risk. If you are interested in the higher chance of profit trades, then make sure to go to our website. We'll put a link at the top here. If we were to analyze the trade as an opening for the 50 strikes, it would also still be bullish. And that is why we still went bullish, okay? Because if we sold the 50 strike to open, you can see this is a vertical call spread, which is also still bullish, because as the price of GM goes up, this trade becomes profitable as well. If it goes down, it is a loss. And we can see from the Greeks, this is still a positive delta trade. So we know this is a bullish long trade. And if we calculate the value of this trade, we can see it costs 105 times 5,000 contracts or trades. It was at least $500,000, $525,000. Okay. So based on this data, that is why we simply follow the trade instead of setting up our own option strategy, because this is a lower chance of profit trade because of the uncertainty involved in the data, and also because this trade could have been a reaction to the media news about the US tariffs on Chinese electric vehicles. And that is not necessarily inside information anymore, okay? Because when we trade based on this data of unusual option activity, we know we make a lot more profits if it is based off of the trades of wealthy investors who are using inside information. And for those trades, if you want access to those, then make sure to go to our website. In conclusion, do you think US tariffs on Chinese electric vehicles will move GM stock higher? Well, comment below. This wealthy investor certainly does think GM stock will go up higher. As usual, please smash the like button, subscribe if you haven't, and have a great day.